Yeah, let's get this going. So I've handed everything over to Chris in terms of hosting. He's assuming going to mute everybody, and I'll let him determine how he wants to run it in terms of asking questions now or in the chat or how you want to do it. But we're very lucky to have Chris over from the U.S. Chamber, and I'm not going to waste any more time. Chris, it's all yours.
Great. Thank you, Simon. As Simon said, my name is Chris Eyler. I am the U.S. Chamber's Executive Director for the Northwest region. And what I am going to do today is give you a pretty broad overview of the steps Congress has taken to respond to the ongoing coronavirus crisis. So far, Congress has passed 3 significant legislative packages. The first was largely a supplemental appropriations bill to provide additional funding for government agencies to respond to the crisis. The second was the Families First Coronavirus Response Act. This bill is requiring small businesses to provide paid sick and family and medical leave. It also provided additional money for state Medicaid programs and additional funding for some food insecurity programs such as WIC and SNAP. Most of what I'm going to talk about today, though, has to do with the so-called Phase 3 bill, which is called the CARES Act. This is, to give you a sense of the scope, it is a $2 trillion package, which is roughly 10% of US GDP. It is intended to be a bridge to help the economy get to the other side of this crisis. There is little doubt that we are going to go through a recession. Congress's hope with this package is that this recession will be as shallow and short as possible. Now, I want to start with a bit of a disclaimer because I'm sure we've all seen the news today that some of the programs under the CARES Act, specifically the Paycheck Protection Program, they have run out of money. We fully expect that Congress is going to add additional money into this program in fairly short order. A bill was put before the Senate earlier this week, and right now there is a bit of a standoff going on. Congress is basically being Congress and bickering over some provisions of additional funding that some want to add to this bill. But given that the program has run out of money, we expect that there is going to be an increased urgency on lawmakers to do the right thing and add additional funding. Right now, it looks like they intend to add $251 billion more to the Paycheck Protection Program. So we expect that will be done sooner rather than later. But clearly, it is unfortunate that the money has run out for the time being, and that's going to complicate things in the short term. But again, I just want, because it's relevant to the rest of what I'm going to talk about, we do expect they will add more money to the funds that they've already passed. So more broadly, with respect to the CARES Act provides resources to individuals. It's providing resources targeted at hospitals. It has $100 billion provided for hospitals, and it provides $150 billion for state and local governments, as well as a number of other programs it's providing resources for. But its most significant resources are being targeted specifically at businesses with the intent to help businesses continue paying their employees during the duration of the crisis. As for the individual benefits, the CARES Act includes the Department of Treasury has started this week issuing checks in the amount of $1,200 per individual and $2,400 for married and joint filers. These will be phased out for incomes above $75,000 for individuals, and they will be phased out for married couples and joint filers for incomes above $150,000. There is also a $500 added amount per child. And again, these checks started going out this week via direct deposit. So if you have a direct deposit set up with the IRS, you should start receiving this money this week. They are starting at the lower end of the income scale, so they're prioritizing lower income taxpayers first and working their way up. So if you haven't gotten your check yet, it is on the way. Additionally, if you don't have a direct deposit set up, they are going to issue paper checks, but unfortunately, those will not start going out until early May, is what we're being told. The other significant provision targeted at individuals is that the Phase 2 bill lifted most eligibility requirements to obtain unemployment insurance if the unemployment is related to COVID-19. And then the Phase 3 bill, the CARES Act, came in and has added $600 per week on top of the regular state unemployment benefit. And that added $600 per week will be provided through July 31st. The eligibility to receive the expanded unemployment benefit will expire when the individual can return to work. So if a business has closed down and furloughed their employees and they have reopened and have started calling their employees back, that is when eligibility for the expanded unemployment benefit would expire. And that is intended to address a lot of concerns that we're hearing about. Employees may be able to make more money on unemployment than they would be able to work, would be able to earn if they went back to work. If they can go back to work, their eligibility is going to expire for the expanded unemployment. And then lastly, you file for this expanded unemployment just like you would regular unemployment by going to the state unemployment insurance office. But as I said, the most significant resources in the CARES Act are targeted at businesses. And again, the goal is to keep the employee tied to the employer as much as possible and enable the employer to continue paying their employee, even if they are shut down either fully or partially or not deemed an essential business. So the CARES Act directs resources at all employers. They have specific resources available for larger and mid-sized employers. And then most significantly, they have resources directed specifically at small businesses, the self-employed and independent contractors. Now, as for the provisions that are available to all employers, the CARES Act has made some temporary changes to the federal tax code. The most significant of these is they are allowing employers to delay the employer portion of payroll taxes. That's the 6.2% per employee that all businesses pay on their workforce to fund Social Security. They're allowing businesses to delay that payment between now and January 1st of 2021. If you elect to delay payment, you will not have to pay any of the delayed payroll taxes until December 31st, 2021. At that time, you will owe 50% of what you delayed in payment of the payroll taxes. The remaining 50% will not come due until December 31st of 2022. The purpose of this is to help businesses with liquidity and cash on hand so that they have money available now to use it to pay their obligations and most specifically continue paying their employees. There is an interaction with this and the Paycheck Protection Program that I'm going to talk about shortly. If a business elects to delay payroll tax payments, they cannot also then request loan forgiveness under the Paycheck Protection Program. A couple of the other changes made to the tax code that are being made available under the CARES Act, businesses can now carry back for 5 years net operating losses again for 2018, 2019, and 2020. They can accelerate recovery of AMT tax credits, and it restores the qualified improvement property depreciation provision that was inadvertently removed in the 2017 tax law. This would enable businesses that have made improvements to their property, like retail establishments and restaurants, allow those businesses to recover a lot of the costs of those improvements.
So Chris, can I ask a quick question on
Yes.
that last slide, on those first two the first 2 points on that last slide? So just to clarify, if you have applied for and obviously intend to use the PPP as it's intended, then you have to know ahead of time that you should not be delaying your payroll taxes.
Correct.
Okay, one or the other.
And just to be, these provisions are largely to be taken advantage of by larger businesses.
Sure.
That would probably not qualify for the Paycheck Protection Program.
Right.
But they are an option that are available to all businesses. The other significant tax provision that is available to all businesses is a new tax credit that actually is not getting much attention in the press because it is new. It was a late addition to the bill, but it is the Employee Retention Tax Credit. This is intended to provide assistance to employers who continue to pay their employees even if they are fully or partially shut down, or if they have seen a 50% drop in gross receipts. It is a refundable tax credit for 50% of the wages paid by the employer, up to $10,000 per employee. So think of it as up to a $5,000 tax credit, a refundable tax credit. There are some restrictions. If an employer has more than 100 employees, they can only claim this tax credit on the employees that they continue to pay who are not still providing services. So if you have employees who are idled, they're not working remotely, they're not essential employees who are still coming in, they're doing nothing, but yet you still pay them, you can claim the tax credit on those employees if you have more than 100 employees. If you're an employer with 100 or fewer employees, you can claim this tax credit on all of your employees. That includes the employees who aren't providing services and are idled. It also includes the employees who are working remotely or via telework, or the employees who are essential and still coming into work. If you are a business with 100 or fewer employees, you can claim this tax credit on all of your employees. Again, the goal here is to encourage businesses to continue paying their employees during the crisis, because we want to, as much as possible, keep the employee tied to their employer, so that when we are able to restart and go back to work, it's easier for businesses to get back up and running, and it's easier for employees to go back to work. Again, there is an interaction with the Paycheck Protection Program. If you claim the employee retention tax credit, you cannot also receive a Paycheck Protection Program loan. And additionally, because this is a tax credit, and under normal circumstances, you couldn't obtain the tax credit until you file your taxes. The Department of Treasury is going to be issuing guidance to enable employers to claim an advance payment of the tax credit, so that they have the money sooner and can use it to continue paying their employees.
Hey Chris, we got a couple of questions in the chat. With the PPP and the idle, is the small business still liable for the employer share of income taxes even when they are not generating income?
Yeah, can I get to that when I start?
Oh yeah. I didn't know if you were seeing the chats.
Oh no, it's all right. It's all right. This is a smaller group, so it's okay that it's a little more informal.
Perfect.
And then just quickly, as I said, there are provisions that are carved out specifically for mid-sized and larger employers. These are largely going to be traditional loans that are backed up by the government, issued through commercial banks with some favorable terms, as well as some restrictions on stock buybacks and executive compensation. But in general, the bill has provided $500 billion for loans, loan guarantees, and Federal Reserve credit facilities. 46 billion of that is set aside for the airline industry and national security businesses, but 454 billion of that is targeted towards businesses at large. And again, these are going to be mostly traditional loans in what you think of them as, but they will have some favorable terms, as well as some restrictions on stock buybacks and executive compensation. We are still waiting for more information on a lot of the programs that are going to be set up under this provision of the CARES Act. However, the Federal Reserve did roll out the proposed details of their Main Street lending facility last week. Again, these are going to be loans, favorable termed loans targeted at mid-sized businesses, as well as provisions allowing the Federal Reserve to buy the loans off of banks once they're issued, as well as buy up a number of the Paycheck Protection Program loans off of banks, so that the banks can continue issuing those loans. But right now, these programs haven't really been stood up and aren't functioning yet. The Department of Treasury, the Federal Reserve, they are still developing the rules for these. And again, part of the delay is that they are targeted at larger businesses. That the urgency isn't there to get these running immediately, but we expect to see them up and running in the very near term. With that, I'm going to spend the rest of the presentation focused on the small business provisions. The most significant of these is the Paycheck Protection Program. When it was passed by Congress, it was a $349 billion loan program for small businesses, 501c3 nonprofits, the self-employed, sole proprietors, and independent contractors. They have also made an exception for restaurants and hotels that are part of national chains. Typically, when though when establishments that are part of national chains apply for assistance through SBA, they would look at them as part of a national organization. For the purposes of the Paycheck Protection Program, they are going to look at restaurants and hotels on a per location basis. That way, most, if not all of those establishments should fall under the fewer than 500 employee threshold and therefore be eligible for the Paycheck Protection Program loan. These are loans equal to 2.5 months of average payroll up to $10 million. They are backed up by the federal government, but you obtain them by going to local and national banks. They have made these as easy to get as possible. Basically, what they're going to ask for is a good faith certification that due to the uncertainty caused by the coronavirus crisis, your operations are going to be adversely impacted. For that reason, there's no collateral required and no personal guarantee. The key feature is that the loan will convert to a grant that you do not have to pay back, equal to the amount spent on payroll, rent, interest on mortgages, and utilities for the 8-week period following origination. The restrictions that they're placing on these are 75% of the loan amount must be spent on payroll. The remaining 25% can be spent on rent, interest, mortgage, or interest on mortgages and utilities. And if you spend all the money on those purposes and 75% is on payroll, then the complete amount of the loan converts to a grant that you do not have to pay back. If you spend the money on anything else, that amount would be converted to a normal loan that would be due in 2 years. They would defer the first payment for 6 months and charge a 1% interest rate. But if you're spending all of the money on 75% of the money on payroll and any remaining amount on rent, interest on mortgages and utilities, all of that would convert into a grant that you don't have to pay back. The other restrictions have to do with any reduction in employees or payroll. If you have reduced your employee headcount, the amount of loan forgiveness would be reduced proportionally. So if you have 10 employees now and you reduce that by 1, you would see loan forgiveness reduced by 10%. Loan forgiveness would also be reduced if the business were to reduce wages by more than 25%. Now, there is a recognition that a lot of businesses, as this crisis unfolded, needed to make a lot of quick decisions and likely laid off employees before this program came into existence. So given that, to help businesses avoid any reduction in loan forgiveness, SBA has issued guidance that says any employee laid off between February 15th and April 26th, if they are brought back on board and wages are restored by June 30th, the business can avoid any reduction in loan forgiveness. Again, the point of the program is to do as much as possible to give businesses the money so they can keep paying their employees. So keep in mind, it doesn't matter if you are shut down or partially shut down or not considered an essential business. You can still apply for the loan. The point of the loan is, and the reason they're making it a grant that you don't have to pay back, is so that you can more easily continue to pay your employees during the crisis. Now, I know that's an awful lot, and I'm sure there's a lot of questions about how this works and who's eligible and what types of things go into the calculation for average payroll, and what types of things can I spend this money on and still get loan forgiveness. We have developed a 4-page guide and checklist that walks you through what types of businesses are eligible, what types of things you need to look at to calculate average payroll. We also take into consideration that a lot of businesses are seasonal. So we have an example of what you need to do if you are a seasonal employer and how to calculate average payroll and how to request what the amount of loan you would need to request. Again, we also specify the types of things that the lender is going to look for when they're approving this loan. Again, they want a good faith certification that you're going to be adversely impacted by the current crisis. And then lastly, it talks about what types of things you can spend the money on and still get loan forgiveness. This is on our website, uschamber.com/SB loans. This document largely deals with small businesses in general. Just today, we developed a similar document that helps independent contractors, sole proprietors, determine their eligibility for the PPP loan program. So I would encourage you to go on our website, download both documents. The program is available to both small businesses as well as independent contractors. And then just again, as a disclaimer, yes, the program did run out of money today, but given the current crisis and the demand for these loans, as well as the bipartisan support that exists for the Paycheck Protection Program, we fully expect that Congress is going to put an additional $200 to $251 billion into this program shortly. So if in looking at these documents, you feel that your business would be eligible, I would encourage you to start talking to your bank as soon as possible and get your application in the queue for when they start issuing loans again. The other major small business program that is enhanced by the CARES Act is the SBA's Economic Injury Disaster Loan Program. This is a program that has been around for 60 years. It's open to small businesses and nonprofits with fewer than 500 employees, sole proprietors, and independent contractors. Under normal circumstances, you can obtain up to $2 million in working capital up to a 30-year term at 3.75% interest, a slightly reduced rate for nonprofits, and payments would be deferred up to a year. The CARES Act is making these loans slightly easier to get. They're basing the loans on credit scores, and no tax returns are required. And again, under normal circumstances, you can get up to $200,000 without a personal guarantee, no collateral for loans of $25,000 or less. Above that, a general security interest would be required. However, there is another disclaimer I have to put on this. Like the Paycheck Protection Program, SBA is hitting their cap on the amount of money available in this program. Again, we fully expect Congress to add more money to this program, but until more money is added, the ability of SBA to issue EIDL loan program or loans is severely limited. And what we are being told by the SBA is that they have looked at the available funding, they've looked at the number of loan applications they've received, and right now, at most, they're able to give out, on average, $25,000 per loan applicant. That includes the up to $10,000 emergency grant that a business can request when they apply for a loan. Under the CARES Act, they are allowing businesses, when they apply for a loan, to request up to $10,000 emergency grant. That grant does not have to be repaid, even if the loan is not approved. But again, because of the demand being placed on this program, SBA is having difficulty providing a full $10,000. So we have been told by numerous SBA regional offices that they are providing this grant based on the number of employees you have, $1,000 per employee. But again, we fully expect Congress to add more money to this, but for the time being, if you've applied for an EIDL, they are having difficulty giving out large sums of money through this program. The other thing to keep in mind about the EIDL is that this program was never set up to deal with a crisis of this magnitude. Typically, this program is used by businesses that go through earthquakes, hurricanes, tornadoes, and other natural disasters, and they need assistance to rebuild their business. This program was never envisioned to deal with businesses nationwide that are shut down due to a crisis like this. That is why Congress is prioritizing the Paycheck Protection Program. That program is set up to deal with a crisis like this, and it's set up to help businesses continue paying their employees. That being said, you can apply for both an EIDL and a Paycheck Protection Program loan, but keep in mind, if you apply for both, you cannot use that money for the same purpose. And additionally, if you get an emergency grant, any amount of the emergency grant would be subtracted from loan forgiveness under the Paycheck Protection Program loan. And also, unlike the Paycheck Protection Program loan, which you go to your bank to get, you go directly to SBA.gov to apply for the SBA EIDL program loan.
They've actually taken the link down now, Chris, or it's disabled. It's still there, but it's yeah, as of a couple hours ago.
Again, like I said, we are as frustrated and disappointed about this situation as everyone else, and we are exerting as much as of our political capital and pressure as we can on Congress to get them to resolve this quickly. I think we have more than demonstrated the need that's out there and the demand for this program. So we fully expect that they're going to get past this impasse and put the money in it. It's just really a question of, how soon they do that. And then quickly, and just on the EIDL, just like with the Paycheck Protection Program loan, we have developed a one-page guide to walk you through more of the details of the EIDL that you can download at the website uschamber.com. So lastly, I just want to talk very quickly about a couple things that were included in the Phase 2 bill, specifically the paid sick and family and medical leave provisions. Under the Phase 2 bill, small businesses with fewer than 500 employees are required to provide 10 days of paid sick leave if the sick leave is related to COVID-19. That sick leave can be taken when the employee is ill, quarantined due to exposure, to take care of themselves or a quarantined family member, or to take care of a child due to a school closure or daycare closure. The employee would be paid their regular rate of pay up to a maximum of $511 per day if the employee is taking care of themselves. If they're out to take care of a family member or child, they would only be paid two-thirds their regular rate of pay, up to $200 per day. Because this is a mandate being placed on small businesses, the federal government is going to reimburse businesses for providing this sick leave through a refundable tax credit. And again, because you under normal circumstances would not be able to get the tax credit until you file your taxes, Treasury is going to be making provisions so that a business can request an advance payment of the tax credit so that they have the money sooner and can use it to pay their employees. This leave is going to be in addition to any other leave that the employer already provides, and there is a narrow exception being made for very small businesses with fewer than 50 employees if the employee is requesting the leave to be out to care for a child whose school or daycare is closed, and if allowing that leave would threaten the viability of the business. That is the only exception that's being made for this provision. And it is not available if the employee can telework or otherwise work remotely. And then lastly, in addition to the paid sick leave, the Phase 2 bill is also requiring businesses with fewer than 50 employees to provide up to 10 weeks of FMLA, but only if the employee needs the leave to take care of a child due to a school or child care closure as a result of COVID-19. This is the only reason that the employee can claim the paid FMLA under the Phase 2 bill. That leave is going to be paid at two-thirds the rate of the employee's regular pay, up to a maximum of $200 per day and $10,000 in the aggregate. And just like with the paid sick leave, the federal government is going to reimburse the business through a refundable tax credit that we expect to see some guidance on shortly, how the business can claim an advance payment of the tax credit. And then again, just like with paid sick leave, this is on top of any other family medical leave that the business provides, and there is the exception for businesses with fewer than 50 employees if providing that leave would threaten the viability of the business.
Hey, Chris, it was asked what was required to prove sickness was due to COVID? Is it a doctor's note kind of deal, or?
I think I have that somewhere. I'm sorry I don't have that on top of my head, but
that's okay.
We do have a similar guide on our website for the paid sick and family medical leave provisions of the Phase 2 bill that walk you through each one, including some of these requirements. But this actually came up in the webinar I just did, so I was going to double check with our policy staff on that to make sure. I know that's an awful lot of information. So again, we are developing helpful tools to assist businesses figure out all these programs. I mentioned the one on the Paycheck Protection Program. I mentioned the one that we just put out today on independent contractors and sole proprietors. We also have one on the Employee Retention Tax Credit. We do have one on the paid sick and family medical leave provisions, and we do have one on the EIDL. When we get more information on the mid-size and larger business loan programs, we will also be developing guide documents for those. But right now, we are focused on the small business programs because the more urgent need is there. Keep in mind, all of these bills were moved through Congress at breakneck speed. And as a result, there are a lot of ambiguities in the statute. There are a lot of things that would otherwise have been defined and spelled out in statute that are left vague. That was done in part to give the agencies as much flexibility as possible to get these programs up and running and to respond to problems that arise as they arise. But again, a lot of it just has to do with the fact that these bills were moved through Congress so quickly. So we are getting new information on each of these programs on a day-to-day, almost hourly basis. We are updating the resources we have available to better explain these programs for you. So keep an eye on our website, uschamber.com. I'm also distributing these to all of the Oregon local chambers so that they can put them on their website. We also have a small business resource website as well, where we are putting these resources as well as other resources to help small businesses navigate the current crisis, a lot of best practices and other guidance for dealing with the public health side of this situation. So with that, I'm happy to turn to any questions.
I've got a question, Chris.
Sure.
Relative to, I've got a business that hires 25 people, some of whom are part-time students, and so they might have a check of $1,000 typically in a month. And if I'm interpreting this all correctly, they would get their regular unemployment calculation plus $600 per week. So that puts them in the bonus round of $2,400 a month just on the $600, plus whatever the calculation is. It makes it hard to call them back under that circumstance instead of just letting it run out and have a windfall for them. Is that
well? So I apologize. I should have been a little more clear. It's about restoring head count, so it doesn't have to necessarily be the same person. So as long as you restore head count, you can avoid reduction in the loan forgiveness.
Yeah, I'm just talking about, the individual person. Their calculus is, I'm much better off on unemployment insurance than I am going back to work. And so that sets up the situation where, do I really want to bring that person back if I have a choice between them and, maybe a full-time person that wouldn't be as affected by this?
Yeah.
Does that make sense?
Yeah, I see what you're saying, and I don't really know what to tell you in that situation. This is something that actually came up at the tail end of the debate on the bill, and there was an effort to spell this out a little more clearly to avoid this situation. They didn't make any changes, so there are going to be situations like this, and like I said, the eligibility for the expanded benefit is going to expire if the employee can come back to work. But in the situation where it's a part-time employee, I really don't know. I would have to ask.
PPP thing is going to last 8 weeks for us essentially.
Right.
That's the benefit period, and yet the climb back out of this hole is going to take 6 months, or I couldn't tell you how long before business would be back to normal, and I would require a full complement of people. So it kind of puts us in the position of saying, okay, well, we'll just see who's going to benefit most greatly by not being brought back. It's sort of at odds. I'm in competition for my employees with the federal benefit package.
Right. And I don't know what to tell you. And I'm communicating to you what the program is and how it works.
I don't think this is your fault, Chris.
Right.
I'm just trying to understand the landscape.
Yeah, this is going to be one of the things that we fully expect Congress, when they do come back and just legislatively speaking, They passed the phase 3 bill. What they're debating now is essentially, you know, a supplemental version of the phase 3 bill to add more funding. But we expect there to be at some point a phase 4 bill, and this is kind of the type of thing that's likely going to come up to be addressed in a phase 4 bill.
So they'll change the rules at that point. And then
I mean, we will see.
Yeah. Okay.
So I'm looking at the chat for the questions.
Andrew, I know you had a couple.
Yeah, it turns out as I was just reading through them, different slides, different questions at different moments in time. Main point here is I'm a small business owner with 5 employees. I get paid after everybody else gets paid and after all the end of the month bills get paid. My paycheck's what's left over after a month of revenue comes in. So no revenues, no paycheck for me. Do any of these programs account for the small business owner's draw or their wages? Or is this just for their employees? Because I'm one of those small businesses that's registered as sole proprietor under taxes. I'm an LLC. At the end of the day, I mean, I know my guys are covered with unemployment insurance if I can't get this PPP loan, which I've been trying for weeks, or about. So, end of the day, what about me?
Well, so when you're calculating average payroll, you look back at this time period 1 year ago, and you look at what you paid out during that time period a year ago, which would include your draw, and that.
Yeah, I guess that's the clarification. Is a lot of these applications they ask for what is payroll. Payroll is a specific thing which includes payroll, taxes, and other things. Now, an employer draw or an owner draw isn't paid, isn't payroll, it's a different legal term. So I'm just wondering if I can ball that all up instead of saying,
I believe so. I think we've put that in both of our documents on the Paycheck Protection Program. So take a look at that. And it talks to that, again, you look back at what you paid a year ago, and this has come up before, and what my understanding is, your draw would be factored into that. Okay.
And for the emergency as well.
When you talk to the bank, talk it through with them as well.
Well, a lot of most of the people at the bank don't even know what's going on. They didn't know I could take an EIDL and a PPP, and they don't know what about an EIDL and this, that, and quite frankly, you're about the first person I've spoken to that knows heads or tails about what's going on. So if I accept what the guide, and albeit they're doing their job, but they're trying to learn, they're trying to figure this out, but they're not exactly financial advisors that I would put my future in that sense. They know how to fill out an application and click send. That's their job. They work at the local branch. So, and they're good people, but they don't know that they're not.
Right. No, I get it.
So at the end of the day, I'm just kind of,
Andrew, we've got CPA people on the chamber like Stover and Yee, and most of your draws, as they would probably structure them, would look like payroll, because that's what they would want to set up for tax purposes. But we've got a couple of CPAs at the chamber,
that's looking at from now. So then I would need to pay myself as an employee for the time being to be forgiven on the grant. Anybody?
Yes.
Yeah, I know, right? That's what I just want to know, at what point does that then become fraud? Because I don't want to do that.
I don't think they know. I think that's the bottom line, is that, the local
depends on who the next president is,
right? They don't know all of this because it's all been changing on them, every other day.
I know. Yeah. Okay. Well, I just, at the end of the day, this is a wartime scenario, and they like to hunt down war criminals at the end of anything. And so if they can find someone that abused a program, I don't
have so many people that they won't be able to track down everybody and try and go after it. And politically, that would be a freaking mess, considering they've been so confused up to this point. I think they're going to forgive damn near everything.
Well, they don't forget money. They
Well,
forget everything else but loans.
And what you can show is, again, your draws as a business owner that might not have been set up through a CPA as payroll.
Because I don't have
That's
one. Yeah.
sure.
And that's the
But
catch.
again, setting it up now to moving forward, but you can also show what
This
you've
is what it
done.
is last
Yeah,
year.
so you're still going to be on your draw. You're still going to be paying taxes as personal income, all that kind of stuff. Well,
Okay.
then that's still personal income, which would be your payroll. It's
Good.
just probably through taxes and all that stuff, you might have paid more than you should have, depending on that it wasn't set up as a payroll. But just check with the CPA.
Well, I tend to have to draw and then give back to the business because I am the business all in one fell swoop. You get what I'm saying?
Your LLC had presumably income tax return last year, right?
Yeah. Schedule C.
Okay. And it would have had a payroll figure.
No. Well, for the guys, for the employees, but not for me.
Well, everything that went out of that business for
No, I don't get a
purposes.
I don't get a 1099K. I do a Schedule C. It's okay. It's a different thing.
Hey, Andrew, I can put you in touch with one of our other chamber members, one of our or doesn't have to be a chamber member, but certainly put you in touch with some of the accountants we have who hopefully will be able to give you, and again, not in a bad way, better information than somebody sitting across the desk at a bank who's processing millions of these things.
Yeah. Nobody's calling. Nobody's doing anything.
We'll get you in touch. The Chamber's official response is don't take a chance on perhaps they won't come after you.
Well, I think
I would do everything as straight as I could.
Huh?
I'd do everything as straight as I could.
Yeah,
But at the end of the day, I don't imagine that they're going to be coming down on people for the fine points.
I'll just try to hold on to as much of it as I can to give it back if I have to.
Yeah.
So, Chris, I have a question. Since everything has been, let's say, depleted for round one and two, I mean, yes, it is phase 3 CARES Act, but as the bucket is about to be filled again and the application gates kind of open up and the links start active again, in the short time, what would be best practices that you've already seen to get applications in? Do you have any of that information yet?
Unfortunately, I mean, the program has been live for 2 weeks. There are no best practices, and it really has been kind of the old west. And it's just get the information, get into the bank, get the application filled out. I'm sorry I don't have any better guidance than that, but this has been rolled out so quickly and kind of in a sloppy way, because banks are just as much in the dark as everyone else. And I think we've gotten to the point where we're past the point where banks have a better sense of what they need to do. On day one, banks they were taking applications, but they couldn't process them because they needed more information from Treasury. I think we're past that at this point, but there's still just a lot of questions about a lot of various scenarios. And so I think as far as what you should do now is just start getting the information for average payroll together so that you can make that calculation, get the application filled out and get into the queue so that you're in line once they restore funding.
Thank you.
Shoot. I had a question on that, but I think you just kind of answered it. 2 questions. One being, of course, do we know if they reset the queue every time they refresh? Is it a new? Oh, that was it. You mentioned that there's a resource that talks about the type of businesses that are going to be approved and the type of small businesses that wouldn't necessarily qualify. So in many regards, a lot of small businesses across America could be categorized in multiple different places. I'm a service industry. I'm a school. I'm a, there's a bunch of different things that I could fall into. So does that list provide, if you will, like a priority rating so I can pick the right category to get me towards the top of the list?
So they're pretty general categories. It's businesses generally that are fewer than 500 employees, 501c3 nonprofits, sole proprietors, and independent contractors. And then the exception that you referenced, that's for restaurants and hotels. Those will be judged on a per location basis.
Okay.
I get what you're saying about other businesses that have multiple locations, but they've only really carved out restaurants and hotels.
I don't want to go to the end of the list as a quote school, because the schools oftentimes, there's a lot of people up in the federal government don't understand that schools can be privately owned. And so if I need to be categorized as a service industry of, consulting, something else, just to be recognized or seen, I just want to know, because there's that second page where you have to select what industry you're in. I kind of feel like every time I click that, I'm telling myself to go to the back of the line.
It really is just first come, first serve. There is no priority being placed on one type of business over the other. So you just need to get in line.
Okay.
Do you have a good relationship with the bank? You have a regular commercial relationship with a bank?
Me?
Yeah.
Yeah, several, but the main business ones, yeah. Apparently they tried to call me, but I had turned off my company phone because there was nothing I could do for like a week, and I decided to move in the middle of a global pandemic, so I had to do it all by myself. And broke my back, took a week or two, finally turned the phone on, and oops, missed that call.
Well, I've been working on this for 2 weeks essentially, and it's been kind of going round and round, and my bank has been really diligent in trying to understand it because they haven't had an SBA relationship before, but they're trying to do this for all of their customers and whatnot. And I think having that relationship with a bank and being in communication with them and having them understand you want to be in the queue and all of that is the most important thing you can do.
Question I have for you then, Pat, is I have a personal account, a business account, U.S. Bank, but then I have a personal account at Selco, Federal, Oregon State Federal Credit Union, OCCCU, Capital One, all these other banks, right? Can I try to go start? Like, where I heard that the funding is spread around, they send a certain amount to the big four, and then more of the funds to the smaller banks, like your local community credit unions and whatnot. Is it likely that if you have a personal account there, that you can get your SBA connected there if you hadn't already had a business account there? Does it have to be business related?
I think it's going to be individual to the bank, and not every bank is going to be doing these loans. So you have to be kind of hooked into a bank that is doing this and knows who you are, and they're going to be more inclined. They can, at this point, I think, say, well, we're not going to deal with anybody who isn't a customer currently. And there are others out there. And then there are others, the big money center banks, Bank of America and Wells and all of those people are the ones that jumped in and clawed in a lot of this money already.
Yeah.
But it's my understanding now that they are having issues with funding these loans because they have to get funded within a certain number of days of having been accepted by SBA. So they're backed up in terms of trying to fulfill all of this, get all the paper done and all of that. So this next tranche is likely to favor community banks.
Good. Okay. Well, I hope U.S. Bank's considered a community bank for that purpose then. But even then.
And we were seeing early on a lot of the big banks quickly hit their internal limits. That was not something we saw as much with the smaller banks. And on a couple of the other webinars I've done, businesses that were working through smaller and community banks seem to be getting approved and access to the money a lot quicker. I know that's just anecdotal, but just based on what I'm hearing from some businesses, the ones that are working through smaller banks seem to be having a little more success in getting the process rolling faster.
There's also alternatives. We got something from QuickBooks because we do all of our stuff via QuickBooks. They've got a loan. And I think I saw one from PayPal or Shopify. I can't remember which, but they have been granted certain amount of funds to grant to their customers.
So are those loans considered part of the PPP or the EIDL, or are those just loans?
So those came on. Those came on this week.
Yeah.
Is that? Which category? So if I accept those loans, or if I go find those loans and accept those loans, does that restrict or limit my access to PPP or EIDL?
Well, no. So those non-traditional lenders that she was just talking about.
Yeah, I got Square, for example.
Those were approved to issue PPP loans this week.
Oh.
So we're seeing a lot more non-traditional lenders and fintech come online, so that it'll be a little bit more accessible.
That might be an easier access point then, because they tend to, they really want to they'll give you money overnight.
But remember, you can't get multiple PPP loans. So once you get one, you're set.
I just want to make sure I get the one that grants the greatest access. I want the biggest life raft available to me.
Right.
That's all. All right.
Any other questions?
No, I'm done. No, I'm kidding.
Well, Chris, I wanna thank you for jumping on. I can't imagine. I mean, we're busy here just at the chamber. I can't imagine how busy you are representing the whole Northwest. So it's fantastic that you were able also to help us, manage that thing last week where we had to bump it to now. So I really appreciate you doing that so we could listen to both. I just want to thank you for getting on. And the PowerPoint, I know you sent it to me. Is that something you're comfortable sharing? Or
yes, feel free to share.
Okay.
Yeah.
And based on last night, there's nothing that needs to be updated from what you showed to mine?
Well, right now that's just the general outline of the program. Okay. Hopefully we'll have more news on the funding here shortly.
I will share it. I appreciate it, Chris.
Thank you.
The best, would you put in the best source of information for the chamber? Is that your site, Chris?
Yeah. I will send links to all of the documents I referenced to Simon so that he can include them in whatever he sends out.
Perfect.
You already have most of them.
Yeah, I get the daily emails as well. So
Great.
That's cool.
Great. All right. Well, thank
Chris.
you.
I appreciate it.
Yeah, thank you very much.
Take care.
Thank you, everybody.
Thank you.
Chris and Simon, thank you so much.
Thanks for putting
No
this
worries.
together,
Thanks,
Simon.
guys.